here and welcome to another episode of TradersTV. Today we're going to be talking about what's happening in the month of Feb. I'm going to start off by talking about my losing trades. I'll look at some of my winning trades and then we'll talk about the key economic news announcements for the month ahead. Let's get started.
So what's happening in the month of Feb? Well, it's a big month of economic news. Towards the end of February, we have the Italian parliamentary elections. In the middle of February, we have the US inflation figures, which is important because the market is trying to identify when the US Federal Reserve are likely to increase interest rates. So that's going to cause a lot of volatility in the US dollar. And towards the early part of February, we're hit with news from three different central banks. You can see here we've got the Reserve Bank of Australia rate statement on Tuesday. We have the Reserve Bank of New Zealand statement on Wednesday and the Bank of England statement on Thursday. So three high impact news announcements across the Australian, New Zealand dollar and British pound currency pairing. So that's obviously important to know because we need to understand what potential risks there are ahead if we have any open trades. After all, trading is about risk management. It's really the most important part of a trader's journey. Whilst not every trade is going to be a winning trade and we're going to get losing trades, we need to apportion for the fact there are going to be some high impact news announcements which could affect the trades that we have. So it's important just to be aware of this, but also with these different kind of news announcements, if we can identify the reaction the market has, that could give us some insight into how strong or weak a potential trend is. So we can use it potentially to our advantage to help identify the state of the market. Another useful way to identify really what the market is doing and to stay abreast of the trends of the market is to look back historically at your trades and try to identify any commonalities between your winners and between your losers. You may find that in some of your losing trades, they might be trading ranging markets. In some of your winning trades, they may be in strong trending markets. So we can use this information to potentially build a focus for the coming month. So let's have a look at some of my activity on my own personal trading for the month of January. So whilst the month of January turned out to be a positive month, there are months where it actually turns out to be a negative month. Okay. Now, in this instance, it was quite close to being a negative month because you can see, even though we ended up with a total return, or at least I ended up with a total return of plus 7%, at one point in time, I was actually down 10% at some point during the month. But because I remained consistent with my own process, okay, and through my years of experience and through my own trading and having strict risk management principles, then that actually got recovered towards the end of the month. So it was a volatile month, and sometimes that's going to happen in trading. Yes, I may have had 15 winning trades and 5 losing trades in a row, but sometimes I may have more losing trades than I have winning trades. For me, my real target is to make sure that my winning trades are the same, if not greater than my losing trades. And for this month, for the month of January, I didn't quite reach that. So even though it was an okay month, a pretty good month actually, there are some key metrics where I will be looking back historically to actually identify what I could have done better. But that's part and parcel of trading. Some months are going to be good. Some months are going to be negative, okay? Some months will be profitable, some months you'll lose money, and that's just the way it goes, okay? And that's the game that we've chosen. So what can we learn from some of these trades that we were taking? Well, a lot of the trades that I was involved in were based around the US dollar to the downside. Why? Because we can see the US dollar is in a pretty decent move lower. But of course, where we are now, we're starting to approach these areas of support on the chart where there's a high possibility we're susceptible to a bounce. Now, we don't know what's going to happen next, okay? All we know is that the market can go down or it can go up. Right now, it's been going down for quite some time. Traders may be looking to take some profits off the table, which could lead to a little bit more upside. Whether this is going to start a new trend to the upside or not, or whether we're just going to pull back to some of these moving averages and then continue going down, of course we don't know that yet, but it's something just to keep an eye out on. If we look at the likes of the euro, we can see the euro's been in a nice trend to the upside, but we're just struggling to make any more high points. So sellers may take control of this market, but there are a few key support levels underneath where buyers could creep in. And the same thing with the British pound. We've been in a strong move to the upside here, but we've just been struggling at the top here where buyers have failed to take it higher and potentially sellers are coming into the market. But again, because we've been in such decent trends to the upside, there are some key levels that we need to be aware of as this market pushes lower. So there's quite a few things to be focusing on for the month of Feb, especially around the news announcements, the high risk news announcements, where you've got to be careful when you're trading with the Australian dollar, the New Zealand dollar, British pound early in Feb, and the US dollar towards the middle of February.
If you want to learn a little bit more about Learn to Trade and who we are, then click on the link below. I'll see you on the next video.